What's good, CEOs? We back at it again for another video. We are talking about a short target trading strategy, right? So I'm going to teach you guys in this video how to size heavier, how to have a shorter target, and also how to trade faster, right? Because we're probably used to, if you're trading NASDAQ, for example, we're used to taking a 100-point move, or maybe like if you're trading ES, maybe a 10-point or a 20-point move, right? So what I'm going to show you guys in this video, how you can go for a 10-point move or a 1-point move in the NASDAQ, which is the NASDAQ futures, right? Or in the S&P 500 futures, which is ES and MES, so you can get a shorter target but have much more profit on the back end. Let's get into it. So I want you guys to see it from this perspective, right? So if we look at any chart, for example, right? So I want to show you guys what this looks like. So let's just zoom into, I'll use the 15-minute chart right here. I'm going to zoom in and I'm going to show you guys what 1 point literally looks like. So this is NQ, right? So for NQ, because as you see, this is the ATR, which is basically, it means the average true range, right? So let me put this down right here. Show you guys what this means, teach y'all a little bit of vocabulary, you know what I'm saying? So ATR stands for average true range. So if I were to sum this up in one word, it basically shows from the high to the low how much this moves. So in ES, from the high to the low, this is how much it basically moves on average, right? But ATR basically says average true range over a specific time period. So if we just use the day, for example, right? If I go to the daily time frame, if I show the high to the low of most of these candles, they're going to average out to roughly around this 250 amount. So let's just average it real quick. Let's go find one. Price range from top to bottom, that's 426. That thing moved crazy that day, right? This day was 319. This day is a little shorter. This was 242. This one was 239. This one was a little smaller. This was 176. So just on average, this is what you can expect to get some type of movement out of the NASDAQ, right? If I go over to ES, for example, right, the ATR is going to be down here, 1.28. Oh, I typed in the wrong thing. Here we go. ES. There we go. So for this one, it's going to be roughly 54, right? So if I go to, obviously I'm on a daily time frame, if I mark this out, from high of day to the low of the day, that's $50, right? From the high of day, low of day to this day, that's roughly 66. So on average, you might see $50, 54 points worth of movement from the high to the low. That doesn't mean from the low, it's just going to go up 54 points. That's not what it means. It's the average, right? Just to give you guys perspective real quick. Now, let me go back to MEQ real quick. So this is what the average range is. So we can reference that. Okay, so overall, NASDAQ might move 250 points a day, right? ES might move, let's just say 50 points a day. So what we want to do is, instead of just targeting trying to get the entire move of the day, why not go for a shorter target with more size? So instead of going for, again, 250 points, like this is what 250 points is, roughly 250 points. We're going to go for this, 10 points. If I can get it to 10 points. You get a point. 9.75, close enough. Hold up. Let me see if I can get it to 10 points. I'm going to get it. Hold up. Come on. I got it. It was just added. There we go. 10 points. So 10 points, again, this is much more easier to hit than this by far, right? But with this one, you might be thinking, well, why would I aim for 10 points when I can easily aim for more, like 20, 30, 40, 50, 60, right? So the point of doing this is to get a guaranteed win, right? There's no guarantees in the market, but it's a much higher probability chance of going 10 points than going 100 points and going 1,000 points, for example, right? So if we go for 10 points, I bet that's easier to hit. For ES, if we go over to ES, we can just target 1 point. So instead of targeting, for example, 50 points, right here, this is what 50 points in reference looks like compared to these bars, right? We're just going to go for literally 1. Look at how small it is, right? So it's 1. So just to put this in perspective real quick too. So let me get rid of the lines and stuff like that on the chart, right? So I'll talk about this a little bit later, but I wanted to kind of show you guys what that looks like. I'm going for a shorter target, but we're going to size a little bit heavier, right? So this is basically what we're doing. We're sizing heavier, target shorter, and then we're trading a little bit faster. So let's get into it. So move this one real quick. boom. You don't always have to Hail Mary every position, right? So I know that we like to go for medium-term targets or long-term targets, right? But you don't have to Hail Mary every single position, right? Use the short, oh my gosh, get it right, get it together. Use this short target strategy, right? For the S&P 500 or NASDAQ. You can trade whatever you want. These are just the ones that I trade and that I like to use this strategy on. Again, they're very liquid. They move. I like them, right? So for ES, because it moves like 50 points, we like to target 4 ticks or 1 point, right? So 4 ticks, if you don't know what a tick is, just think of a tick like a quarter for if you're referencing S&P and NASDAQ, right? So 25 cents, 1 point equals $1, right? Just look at it like that and you'll basically understand it. So 40 ticks, right? 40 quarters equals $10, right? So NASDAQ, we're going to target 40 ticks because it moves roughly 250 points a day. We can go for 10 points. ES moves 50 points a day. We can target roughly 1 point, right? So that's the overall goal of the strategy, right? So this is what a successful trade would look like. So if we had, again, let's just say, for example, right? We have 5 ES contracts, right? That'll be roughly $50 a point per contract. So if you get 1 ES contract, if price goes up $1, you make $50 for that contract, right? So if we get 5, then 5 times 50, we make $250, right? So if we get 5 NQ contracts, each NQ contract, NASDAQ contract, you make $20 a point. If you have 5 of those and it's $20 a point, that's roughly $100 a point in total, and you go for a 10-point target, 100 times 10 is $1,000, right? So we're going for, like, again, a quick in and out trade basically where we can secure a pretty decent amount of money, right, in a very short time period, right? So this is what a successful trade would look like. Now, obviously, the goal that I want you guys to have is eventually get to a point where you're sizing up much heavier than that. So you're going, let's say, for example, 20 ES contracts. So 20 ES contracts, you'd be going, that would be $1,000 a point, right? 5 NQ contracts, I want you guys to be doing 20 to 25, right? So 20 NQ contracts, instead of 5, you can make it $4,000 right there. Boom, in and out, 4,000, right? Now, obviously, you start small, you work your way up to that point, right? But that's the goal. Now, let me delete this real quick. So there's something called margin requirement that I wanted to get into, right? So margin requirement basically is like how much you need to have in order to get into this position, right? So that's basically what it means. So margin requirement is how much you need to have in order to get into this position. So let me just show you. Actually, I have it right here. I'll just show you guys that right here. That's fine. So if you trade a micro E-mini S&P 500 contract, right? That's MES. So if all the options traders out there, this is the equivalent of trading SPY, right? ES or E-mini S&P 500 is basically the same thing as trading SPX, right? They're still the same thing. It's still referencing the S&P 500. One is just a little bit smaller. One is regular size, right? The actual size of it, right? We have micro E-mini NASDAQ MNQ, which is basically for options traders. This is basically QQQ, right? And then the E-mini NASDAQ, which is the regular NQ, right? So this is basically these numbers, how much you need to have in your account to trade one contract. So, for example, if you want to get 5 ES contracts, you need to have at least $2,500 in your account, like, because it's $500 per contract. So 500 times 5, have $2,500 in your account. You do 5 ES contracts, boom, target 250, in and out, you're done, right? For NASDAQ, you want to get 5 NQ contracts, it's going to be $1,000 each contract. There's 5, you want to have $5,000 in your account. That's why I'm saying if you have a small account, start off with MES or MNQ because you only need $50 in your account per contract that you want to get. So you can get, so if you have $300 in your account, you can get 5, maybe 6 MES contracts. So 6 MES contracts would be, you'd make about 25 to 30 points for that short target entry. But again, that's really good because again, that's 10% of your account, right? You're making $30 on a $300 account. That's good, right? So again, it's not about the size. It's literally just about, again, the target, right? Because you can do these multiple times, but that's why I wanted to show you that. That's why they're short targets. So we delete this. You can do this Monday and Friday. I recommend just taking one trade, right? So get a sniper entry, one shot, one trade. So because you're treating it like that, I want you to treat it like this is the only trade I'm going to take today, right? So I want you to prepare as if you're only going to take one trade today. And you do this by doing 2 things. You manage your risk. Make sure that the trade doesn't risk more than 2 to 10% of your account balance. If you have a bigger account, let's say that's relatively big, but if you have a $10,000 account, $100,000 account, don't risk more than 2% of your account. But if you have a small account, like you might have $500 or maybe $1,000 or something like that, right? You can risk 10% of your account. I don't mind that, but that's up to you. That's up to your risk tolerance. If you're not willing to risk, let's say, for example, you have $1,000 in your account. If you're not willing to risk $100 on one trade in that short period of time, then you can risk less than that. You can risk, let's say, 5%, which would be $50, right? You'd be risking $50 if you had a $1,000 account, because 5% of 1,000 is 50, right? Do whatever works for you, but make sure you manage your risk on every single trade that you take. And then the next thing is enter only based on the strat. So again, if you're using the strat as a trading strategy based on the previous videos I've covered, make sure you go watch those as well. Use actionable signals, full time frame continuity, FTFC, and broad informations, right? So I used all of this in order to enter this one position. It seems like a lot, but here's the thing. I'm in and out of these trades really, really, really quickly. So let me show you an example of this in the market. So example, let's say you have a $500 account and you size 5 contracts of MES sells. So you're selling 5 MES contracts, micro, E-mini, S&P 500 contracts, right? Your target is 1 point, meaning you'll make $25 on this trade when it goes in your favor, right? So our entry is based on bearish time frame, full time frame continuity. So if you look at this chart right now, what do you see? Blood, like it's red, like right here, boom. Daily time frame, this is the hourly time frame, but I checked on the daily time frame, it's also red, right? The hourly time frame is red, the 15-minute, 30-minute is red, the 5-minute is red, and now the 1 minute was also red as well. So if everything is red and everything is going down, then again, I have multiple participation groups going in the same exact direction. So I want to be in the same direction as them too, right? So bearish full time frame continuity. So we got, we got full time frame continuity checked off, right? Broad information, right? Price took out the high right here. Price took out the high, came back down, and now we're coming to take out that low, right? We did it, we came up, take out the high. Now we're coming down to take out the low, right? And now for actionable signal on the 1 minute time frame, right? And by the way, you see the time it is. This is 8:35 and I'm on the Eastern time, right? Eastern time zone. So market didn't even open yet, right? Market opens at 9:30 EST. It's 8:35, 8:40, and I'm taking this before the market opens because that's the beauty of futures, right? So market was moving a little bit slower, so I was able to take advantage of that. So I took a 2-2 bearish reversal on the 1 minute time frame. So price broke the high, came back, failed, right? Because price came back, pulled back in. This is not a failed two up because it's still a bullish candle, but it did pull back from this high that it created right here. Seller stepped in the market here and pushed price all the way down, and I was targeting a 2-2 bearish reversal. And as you can see, this was my entry. Again, it's really small. I entered at 53.41.50, targeted 53.40.50. Boom, in and out. 1 point out of the trade, done. And I had a really tight stop loss too, because as soon as price breaks that low, price is just gonna go, right? Once it breaks that low, boom, price is gonna rip to the downside. That's literally what it did. Price came down, literally got to that point, and then pulled right back. And I was already out of the trade, in and out, boom, 1 point. And again, this moves 50 points in a day. So I only need to catch one. So like right here, if you move, let's say you move this to right here, that's the same thing. Matter of fact, let me pull up the chart so I can show y'all. If I go to the 1 minute time frame, boom. This was the entry. This is the entry right here. I took a short position right here, boom. And I targeted 1 point, boom, 1 point. After that 1 point, price did pull back. Cool, I was already out of the trade. And there was multiple, that's what I'm saying. This is what I was talking to you about with multiple positions. If you get one win, the next trade subsequent, matter of fact, let me show y'all my trading plan a little bit. I'm not going to show y'all, you know what I'm saying, everything, but I'm going to show y'all a little something. So let me go, where is it at? Yeah, here we go. Trading plan, short target strategy, boom. So this is what I like. This is the rules that I have for myself. Look at the monthly time frame, then the weekly, then the daily, then the hourly. Make sure there's full time frame continuity. Make sure everything's going in the same direction, right? I put monthly, weekly, daily, hourly, but if you're taking a day trade, you can just focus on the daily, hourly, 30-minute, 15-minute, like at least just use those, right? At least use 4 time frames of that hierarchy and then lower, right? So as long as the daily and the hourly are going in the same direction, then make sure the other lower time frames are doing the same and you're straight, right? So only fire when all of these match up. So if I go on this time frame, if I pull up the 4 time frames real quick, this was a bullish, right? This is bullish right now, but when the day started, price was going down, right? So price was down here. If you look at my crosshair, during this period, price was all the way down here. Price opened up right here for the daily time frame. Boom. So as long as price was below this blue level where price opened up, that means that the daily time frame was bearish, and down below this level, the hourly time frame is bearish. So all these time frames are now bearish. So now I can use this to my advantage. So if I'm on a 15-minute, again, this was also bearish at that point. So on the 1-minute time frame, it was easy. Because again, if you look at where my crosshairs lined up, 15-minute, hourly, and at that point, the daily was also red. So now I have multiple time frames that are also bearish. Now I can take bearish setups. So boom, what happens right here? I could have took this right here for 1 point. It actually went farther than that. So right, if I move this right here, this is 1 point. Price easily hit that. Came down already and already took that out for 1 point. If I hold it for longer, if I want to, boom, that's 2 points, 3 points, 4 points, 5 points, 6 points. But the goal is to get, again, size for the target of getting 1 point. If it keeps going, boom, you can hold it for a little bit longer, but the goal is to make sure it doesn't go back against you. So if you're up 1 point, boom, take majority of your profit off the table so that way price doesn't reverse against you. If price keeps going, you can leave runners if you want to, but the goal is to get the bulk of your money off of that short target, and then from there leave runners if you need to, right? So that's the objective. If you're able to get these precise entries, that also builds up your muscle of taking precise entries when you're doing longer targets, right? Because right here, again, if I'm just targeting 1 point, I'm in and out of the trade right here at that right here. But if I want to target this low right here, I can easily do that. And that's 7 points right there. So if I size in, again, so on a small account, if you size in with 5 MES contracts, you'll make $25 a point times 7, what is that? 25 times 7.5. I think, let me get my calculator out real quick. 25 times 7.25 is $181.25 if you held all those contracts, right? So your $500 account, you're now up $181, so now you're at $681. So just to put that in perspective, if you had a $5,000 account, you would have made $1,800 in, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes. In 9 minutes, boom, $1,800 if you had a $5,000 account. $500 account, you make $181 in 9 minutes. That's the point. But if you don't have the skill set of getting these precise entries and having to be this accurate and needing all this information before you enter a position, then that's gonna hold you back if you try to do longer entries. So this builds up that muscle of taking precise entries, so that way if you need to hold or you want to hold because you already caught the bulk of your position on a short target, you can do that, right? So again, there was so many setups for, again, 1 point. So that's 1 point right there. That's a 2-2 bearish reversal right there. Boom. We have another 2-2 bearish reversal. This is the one I took. Boom. 2-2 bearish reversal. What do we get again? We get a 2-2 bearish reversal. 1 point. This one flies to the downside. Look at this. Price literally didn't give you a time to exit until right here. Why? Because we have a 2 down, 2 down, 2 down, 2 down, inside candle, 2 down, inside candle. Now we get a 2 up. So if I'm selling, I make money as price is going down. If price doesn't break a high, that means price is either staying inside or it's going down. In this case, it was going down. It stayed inside, went down, stayed inside. Then it broke the high. I can exit at that point. So I can make 10. That's 10 points. So if I had 5 contracts, like I said, if I had 5 contracts, let's say you have a $500 account, right? Boom. You size in with, what's that? 5 contracts. Boom. Let's say you take the bulk of it off. Let's say you take off 3 contracts at $1. So boom. On that, you would make $15. Boom. Lock in that profit already. You move your stop loss to break even. Then the trade goes for another 10 points. So the last two contracts that you got, remember, that's $10, right? Because again, you have two contracts left at $5 a point. That's $10. So 10 times 10, you make $100 right there. So you just secure $15, move your stop loss to break even. Now you get a quick win, and now you get a long-term win just by holding the position that you already entered. So now you get $115 in what? 1, 2, 3, 4, 5, 6, 7 minutes on your account. Again, put this in perspective for the people that have, a little bit bigger size accounts or regular accounts. You have $5,000. This works the exact same way. If you have 5 ES contracts, right? So that's $500 margin per contract. So if you have $5,000 in your account, you're straight. You would be making $50 a point. So at one point, right, let's say you cut 3 contracts. You make $150. You move your stop loss to break even. You got 2 contracts left where you make $100 every single point. So $100 a point times 10 is 1,000. So you secure $1,000 or $1,150 in 7 minutes, 8 minutes, in and out. That's a short target strategy. You focus on getting the quick win, securing your profit, managing your risk. If price keeps going, you just keep holding it. You leave runners if you need to. But the point is, I want you guys to get in the habit of getting the short targets a part of your strategy, because this is another skill set, right? The same way in business and life and stuff like that, having certain skills allows you to just be overall better and just level up, right? So the short target strategy is something I want you to add to your arsenal, right? Have this in your bag. The same way in basketball. You might, like Allen Iverson, for example, he had the crossover. That was in his bag. That was something he had in his arsenal. I want you to get your own crossover, this, in your arsenal, right? So, again, I hope I broke this down really well. Again, if you have a small account, big account, doesn't matter. Again, manage your risk, have a high probability setup, and just go for, again, on ES, 4 ticks, 1 point. On NQ, go for 10 points, go for 40 ticks, right? Just do a short target. Again, manage your risk on these trades. Size heavier, target shorter, trade faster, and you'll be able to get quicker wins in the market, and you'll just be able to perform overall better. So I hope this was helpful. I'll see you guys in the next video.